Hello everyone and welcome to the Triple T Trade channel. Me and three of my friends, and awesome traders as well, are launching the most useful, up-to-date educational channel for traders on YouTube, means to you. Today I will tell you how financial markets work in general, what trading is, and why millions of people around the world earn big money on this. So let's go! Despite all the complexity and variety, everything is pretty simple. The financial market is a place where individuals, companies, and even states can buy and sell various assets. Imagine a conventional market where there is a seller who wants to sell something and the buyer. Only this is a very big market. The largest financial market is the Forex market. London, as the largest dealing center in the world, occupies more than 35% of this market. The capitalization of the Forex market is estimated at more than $2 quadrillion, can you imagine? And the trading volume exceeds $6 trillion a day. But of course, it all started much more modestly. The history of the exchange trade is usually attributed to the city of Bruges, Belgium. There, in the town square, merchants traded promissory notes. A promissory note is similar to a loan agreement. And the oldest stock exchange in the world, the Amsterdam Stock Exchange, was founded in the late 16th century. It appeared due to the fact that the Dutch East Indian Company began to raise money by selling shares and promising profits to its investors. And at the beginning of the 17th century, the Amsterdam Stock Exchange also became a commodity exchange, to where samples of goods were brought. Small batches for buyers to try, who could then order large volumes and have them delivered to where they actually wanted. Also, at the beginning of the 17th century, on the other side of the globe, in Japan, appeared the first transactions for buying and selling future contracts. As local feudal lords tried to become richer as quickly as possible, they began to sell receipts for the rice to be harvested in the future. For the buyers, there was a great chance to get the goods in a year or two at the price that they already knew today. And for the seller, it provided the opportunity to get money for the business development. Today, there are different types of markets that are divided by the place of bidding. For example, an exchange market where everything is strictly regulated. There, trading takes place during a certain time called a trading session. Only reliable companies that have been verified by the exchange itself are allowed to enter the exchange market. These are, for example, Twitter, let's say Bank of America, or maybe even Disney. And for the rest of the companies, there is an over-the-counter market. It also has an organized section with its own rules and laws, but much more flexible. These include Forex, which I've already mentioned to you, as well as Nasdaq, RTC Board, OTCQX, and OTCQB. You shouldn't have heard of these names, for sure. There are also unorganized OTC markets. The most popular is pink sheets. Such markets also include direct derivative transactions between two companies or the sale of a block of shares to a certain shareholder. This is an open, negotiated market where there are no strict trading rules and therefore there are plenty of fraudulent schemes. One of the most common is the so-called pump and dump, when the price of an asset is artificially driven up in order to earn as much as possible from those investors who are not experienced enough. Poor guys. Financial markets can also be divided by the types of assets that can be bought or sold there, such as currencies, for example, such pairs as the euro US dollar or British pound US dollar or US dollar Japanese yen, and many more, of course. Also commodities such as gold, silver, oil, gas, grains, and so on. Cryptocurrencies, well, the popular ones that you know is Bitcoin, Ethereum, and Ripple, for example. Also insurance and many others. Let's now take a closer look at how the exchange works. As I said, there is the place where the buyer and the seller literally meet. On the stock exchange, they are called the investor and the issuer. However, an ordinary person cannot just come with the roll of bills, let's say, and buy something. To do this, he or she needs to get a certain license. This process is complicated, long, and takes a lot of effort. But if you want to buy something and you do not want to bother with obtaining permits, you can contact special organizations. They are called management companies. In this case, however, they will decide for themselves what assets to buy and in what volumes in order to bring profit to their customers. And they will try to de-risk investments as much as possible. And if you want to control your finances and conclude transactions yourself, you can use a broker. These are intermediaries between issuer and investors that provide access to the exchange under their license and make transactions for a small commission. In fact, all trading platforms are nothing more than a broker. And here we come to the main question: who in fact is a trader? Well, the trader is me. To be more exact, this is a person who trades on the financial market and who seeks to profit from trading. This person is trying to buy cheap and to sell expensive. The difference in the price is his or hers profit. A trader enters into transactions buying or selling a particular type of asset, but the trader does not become its owner. Please, do not be confused and feel the difference between trader and investor. If you, as an investor, buy an Apple or, let's say, Amazon share, you own a small piece of this company. In the case of trading, you only enter into a transaction with another trader regarding the change of the price for an asset. Despite the development and the long history of financial markets, they still remain quite spontaneous and unpredictable. The markets are quite complex and very volatile. And even if you've got huge experience and a vast knowledge in everything, you as a trader, to some extent, will always depend on good luck. Trading is 30% of luck and 70% of skills, knowledge and experience, which, by the way, I'm going to share with you in my videos. Trading is somewhat similar to a game of chess, where you need to be able to think several moves ahead. Understanding and strictly adhering to your trading rules, which must be constantly updated, will help you to earn consistently on the financial market. Trading is also a great opportunity to boost your fortune. But you should remember that trading on financial markets requires certain knowledge and also money. So in any case, you should start trading only with the funds you are not afraid to lose. Although trading can bring great profits, you risk losing everything. I hope this basic introduction was useful for you, and you now, at least roughly, understand what place trading occupies in the world of finance. Later, we will begin to analyze this sphere in more detail, and we'll try to reveal all the secrets. Guys, please share what you think about trading down in the comments below, and tell me if this video was useful. I really want to know what you are interested in, and to make the following videos taken into the account your questions. Do subscribe to our channel and hit the bell if you want to see the next video. My name is Anna. Goodbye and see you later.